Hello guys, this is the pre-market analysis of 29th of June. So we have a couple of more days for this month, for the monthly expiry. So today and tomorrow. So tomorrow's Nifty expiry. And see, the first thing first, we are not looking for anything beyond on the downside 23,800 and on the upside 250 level. Okay, so we are looking for this range, but anyway, 24,000 is going to be a support. There are some negatives, there are some escalation which is going on, Iran, US issues also there that I'll be discussing. But most importantly, what we are looking for is, as of now, 23,800 to 24,200 range, not beyond that for this monthly expiry. If something happens, so good, so positive, that is when Nifty is going to break that level. I don't think that is going to happen because even when we had some good positivity in the last week, it didn't happen. So there is no such chance for that now anyway, at least for this month expiry. There is a chance it may break down if things escalate further. Okay, so there are some indications of that also that I'll be discussing. So this is the most important part. Nifty is likely to stay in the range of 24,000 to 24,250. A short range if I want to take 23,800 to 24,200 to 50 range. If I need to take it slightly a broader range for this expiry, considering the risk management and everything. Okay, so in between, as a scalper, you'll be getting opportunity. As sellers, you'll be able to sell and manage position accordingly if this is a range, right? So this is what we are looking for. Now coming to the weekend development that we can discuss now. See, again, last 10 days we have not seen any such issues. Crude price was consistently coming down, almost came to 70. Also we have seen Brent is coming to 73, WTI is at 71. So last 10 days it was perfect, and even oil prices have fallen to $70 per barrel, which is very comfortable. But from Thursday onwards, some issues are developing. Weekend, there are some escalation also. So Iranian drone has been attacked, right? In fact, an Iranian drone is reportedly struck at the Panama flagged oil tanker Kiku, and the exact timing Friday, I think. So it's not very clear, but US immediately responded. US launched strike on Iranian radar facilities and drone facilities, and Iran responded on Sunday morning that Iran in fact attacked US bases, US air bases in Kuwait and Bahrain. And Iran, in fact, again tightening the control of the Strait of Hormuz, and the warning signals has been issued. Any vessel which is crossing without Iran approval, there is a warning which is given, or using Oman, proposed route. Either of these, otherwise, will face consequences. Okay, so this is the warning which has been issued. So things are getting slightly difficult again. It's not that smooth that we have seen in the last 10 days, but we have seen even the worst situation before. So market have already seen that worst phase. Similarly, we were expecting so good in the last 10 days. Nothing much have happened, especially in our market. So we are not expecting too much positive also. So that is why I told you we are going to be, and most likely to be, in the range of 23,800 and 24,200. There is no need to discuss any other things. Once we know this is going to be the range, then rest of the things is just for your knowledge purpose, your understanding purpose, right? We are not going to write any exam or anything to know all these, right? So Trump also defended the latest US airstrikes, and what he said is, attacks on Iranian drone storage sites, right? And radar facilities were actually justified because Iran is attacking, Iran is violating ceasefire. So Iran, according to Trump, Iran violated the truce, and if the US resumes full-scale war, Iran would no longer exist. That same threat has been, coming from the Trump side, president side. So the current situation is simple. The tension is escalating. You don't want to know entire story. We just need to know the situation is not that cool as what we have seen in the last 10 days. But we have seen the worst, right? We have seen the possible best scenario also. So when in the best scenario also, Nifty were not able to cross 24,200. In the worst case also, Nifty was defending the lower level. So that is why today we are looking for range of 23,800. The worst is 23,800 is what I'm looking for. And 24,200, I don't think that it will break. There is nothing, there is no such, you need some impulse or you need something, right, to break that. We don't have that. Okay, especially in the present situation. Now, if you look at the activity in the Strait of Hormuz also, last 24 hours, only 12 ships has been crossed through Strait of Hormuz, 6 inbound and 6 outbound. If you compare it with last week, that is because of this warning issued by Iran. That means it is going back to the similar old situation. 12 is very less. On an average, it's around 60 before war. And we have seen last Friday, it's around 60, and Thursday, it came to 80. So the traffic and the shipping was so active, and the crude prices have came down. So there is a possibility that the crude will go up. In that case, market can come down. So keep a watch on crude. That's more important. And anything is there in between, it will be reflected in the crude, and then you will see that immediate impact on our market also. So as of now, WTI is around 70, Brent is around 73. So it's like 1 to 1.5% up, move down. This is what we are seeing now, which is very normal, right? Not a big deal. But if you see some good spike in between, market hours, then most likely that will have an impact on the market. And remember, that is inversely proportional. If crude is spiking on the upside, we will have to look for a downside move. So there are some fresh developments, like the negotiation is resuming, that 60 days talk is going on, and all those things are there. US futures, if you see, it's slightly trading negative. Okay, so yeah, all the three US futures, in fact, slightly trading slightly positive despite all these. So the market factors today, this fresh US-Iran escalation, keep a watch on that. That's very important. Positive is negotiation started, and US futures are looking positive. That is also positive. So see, both US and Iran, they both are accusing each other for violating the ceasefire. So both side, in fact, showing some kind of restraint also, and any further escalation that can, trigger more negativity to the market. Apart from that, there are some update on monsoon also, which is again not good. June, it's the month where we are supposed to get the maximum rainfall. And remember, guys, when we talk about our economy, everything, in fact, depends on monsoon. Have so big impact, right? Not only don't just look at agriculture. So agriculture and allied sectors, and it is connected to many things, right? Many other sectors also, right? For example, the companies which are supplying the machineries to agriculture, right? And the entire rural consumption, all these, and FMCG, everything completely depends. If agriculture is not good, rural consumption also come down. So rural consumption means not only on agricultural item in all cases. So what happens when the monsoon is not good? Firstly, there will be a direct impact on agriculture, and the prices of food will go up in the next quarter. That impact we are going to see later, and that will definitely add pressure to RBI to increase the interest rate to control inflation. So that is negative for the market. And if you look at this update, June, where we are supposed to get good rainfall, we actually got less than 50%. In fact, normal rainfall that on average used to get is around 141 millimeter. We just got around 77, which is close to 50%. You don't want to know the exact number. You just need to know there is some issue which is coming, right? As of now, it may not be factored in the prices or anything, but this issue is going to have a big impact. So when we plan for our long term, we will have an impact of this long term investment, right? So the possibility of rate hike, the possibility of future inflation, and all those is there. I don't want to get into state-wise data, deficient states, and all those, because we are not preparing for any exam. Now, coming to institutional data, FIIs were net buyers, right? And if you see last 5 sessions, out of which 3 sessions FIIs were buying, and I think last session they bought around 400 crore. See, it's a small buying, but still it is positive because FIIs are no longer persistent, continuous sellers. So now market also not taking it confidently that afternoon FIIs are coming and selling, so we'll also join the party. No, now FIIs can be buyers also, so you don't want to get trapped, right? So you won't take such kind of positioning as well. Now DII is bought for around 5,750 crore. Now if you look at the open interest data, barely any put OI is added, 13.5% new call OI, which means it looks slightly bearish. Call OI is at the higher level. You are developing, strong resistance. You're not expecting market to close this level. Where is that level I'm talking about? 24,200 level. So if you look at the maximum call OI, it is at 24,200, put side 23,800. But there are 24,000 levels also, that is a straddle players, where they get the premium and they can look at the break even on the upside and the lower side beyond 24,200. You're getting such kind of premium also. PCR, in fact, because of more call addition, have fallen to slightly neutral. It was slightly bullish last day with the overall positive scenarios. It was 1.19, but now it is 1.02, that level. So it's neutral to flat. it may change to negative also today, because there is a possibility more call additions will come right at the market opening. In fact, my plan is also the same. Market opening, I'll be adding more calls. I'm looking for, even if I'm looking for 24,200 as a resistance, even I'll start selling calls at 24,100 or onwards, because I get premium and I can wait till 24,200. So that premium, if it is more than 100, then I'll be, means if I'm looking for 24,200 as the resistance, if I'm getting 100 rupee premium, I'll look at the premium and then I'll discuss that later. If I'm getting even 75 rupee premium, if market is going to 24,200, then I'll be in a loss of what, 25 rupee. But at that time, I'll sell 24,200 also, and I'll adjust. And along with that, I'll be selling puts also, and I'll collect more premium, right? 24,000 I can sell, 24,100 also I can sell. So like that, we will be managing. Now, OI. Okay, now coming to BSE, last day it was expiry, so 58% future OI unwinding was there, 83.5% call OI unwinding, 89% put OI unwinding. That's expiry game, but still, if you look at it, it's again more put OI unwinding is what you have seen. Okay, now GIFT Nifty is also indicating a flat opening. There is no negative or anything. So it will be opening around 24,030, 24,020. So 24,000, which is immediate support. So they may take a support at 24,000 and you may get an up move in the opening. There is a possibility, there is a up move from 24,000 can come, and then 24,200 is a strong resistance. Okay. So that's a very important level that you just need to keep in mind. If ignore all these, you can see the crude price. If it is spiking, then market can give a good dip also. Otherwise, it will be in the range. Higher possibility is that the market will be in 24,000 to 24,200 range. That's a higher probability. If there is any escalation or situational issues which are coming, that will be reflected on the crude price. Then market may break 24,000. In that case, market can come to 23,800 also. So there are positives, as I told you. The negotiation is going on. Peace talks is still going on. US futures are trading positive, which is looking good. And if you look at major ADRs, all are positive. FIIs are buying. These are very good. But negative factors are, there are some escalation issues and all these threats are again there. Oil prices slightly increased. Monsoon rainfall deficiency, which may not have an intraday impact today, but it will have a future impact. Definitely. And most importantly, tomorrow's monthly expiry and that monthly volatility will be there. We have seen so big swings this month. So we want to, it will be very interesting to see where the closing and where the adjustment and all those is going to come. Okay, so, and one more thing is that Strait of Hormuz, significant reduction in the ship movement. So that means that is actually not good, right, compared to last day. So as I told you, call open interest maximum at 24,200, put side is 23,800. That's going to be the range. 24,000 also put OI is there, which means 24 to 24,000 can also be a shorter range. But most likely, if there is one spike you get in the crude oil, it will be broken and market tend to be in the range of 23. So be prepared for 23,800 to 200 range rather than at 24,000 to 2. Yes, you can be taking that bet also, slightly more premium you'll be getting, but be prepared for 23,800 to that range also. In a worst case, you should be in a position to shift. You should be in a position to do martingale. You should be in a position to do averaging. So whatever it is, whatever is convenient for you. If you have slightly more capital, we can do averaging without much risk. If you have even more capital, we can do martingale at slightly more risk, right? So accordingly, you should be in a position to manage your position. So yeah, mainly this is what, there is nothing much. Mainly during market hours, this issue is what you need to keep a watch on. Oil prices, what you need to watch on. That's it, guys. Thank you so much. If you are looking for any live market mentoring program, we have the sessions, we have the community where we trade together, where we learn together. So you can get in touch with us, and I see you there. Thank you.